Becky, thank you so much. Hopefully you can hear and see me okay. So just to put some, obviously, faces to names, which is great. I'm Duncan. I'm one of the specialist support managers with Isla. You can see too. We're going to launch straight in. We've got quite a bit to cover, so we will sort of crack on with it if that's okay. So if I can just share my screen, and welcome. Lovely. So hopefully, well, to the main screen. Hopefully you can see the PowerPoint of just a title slide at the moment, and we will just start through. So what we are going to be covering today is I'm going to start with a sort of 5 or 6 questions for you to have a go at. And then I'm going to look at answering those questions with you with a far more detailed explanation. And then after that, I'm going to be handing over to Isla to go through a practical run through of the fact finder in Catalyst, which will then cover some of the common pitfalls. Hopefully then we will have some time for Q&As at the end and a little bit of a how to keep up to date with debt relief order processes and also development. So yeah, so whilst we're going through this, once we've gone through the quiz bit, if you've got any questions, if you can put them in the chat box initially, and we'll try and cover them at the end, because that does depend on how much time we have left and whether we get through all of them. So, but if I could start, Becky, would you be able to launch the quiz? If we could have about 5 minutes to do the quiz, there's 6 questions, so just not quite a minute each, and then we'll look at going through the answers and details of sort of some helpful tips and guides on those sort of areas.
Yep, Duncan, I've launched that. You might not be able to see it, but the guests should be able to. And if you can't, then please just drop me a note on chat.
Lovely, thanks, Becky. So for those who can't see, I won't do the slides because it gives the answers away. So I've got a slide for each question. But the questions that should be popping up is question 1 was, what was the most common reason for refusal of a DRO in 2024-25? And I haven't got all the list of the possible answers. I've only got the answer on my list. That's not helpful, is it?
Shall I read out the options?
If you've got the options, that'd be great. Thank you.
I have. So the potential answers are: there had been a preference within. Oh, I've only got half the answers. Hang on a sec. Let me see if I can move.
I've got them all, Isla. Shall I do it?
Yeah, no,
we'll work it out between us.
Square. So the possible answers are: there was a preference in the last 2 years. There was a transaction at undervalue within the last 2 years. The applicant had a DRO in the last 6 years. The applicant has a current IVA, or the qualifying debts were above the limit.
Brilliant, thank you. Obviously, those doing the quiz can do those and have a good go, but I'll go through the answer in a moment. The second one was, what was the most common reason for a DRO to be revoked in 2024-2025?
Okay, your options are: the person with the DRO died, surplus income went above £75 a month during the moratorium, the value of assets went above £2,000 during the moratorium, it was discovered that qualifying debts were above the debt limit when the application was made, or a preference was made in the previous 2 years.
That's great, thank you. Then question 3 was, expenditure on alcohol and tobacco items is an allowable expenditure in a DRO. True or false? And then question 4, what are the different situations when the answer yes should be chosen to the question, has an attachment of earnings order been applied to this debt?
So the options are: if there's an attachment of earnings order, or the client is having deductions from benefit, or in either of the above situations.
Thank you. And question 5 was, if a client has a claim for compensation based on motor finance secret commission, which has been in the press quite a lot very recently, when will this be treated as an asset for DRO?
Options are: when the client identifies they have a claim, when the client receives confirmation they're entitled to compensation, or when the client receives the compensation.
And the last question was, if a client has cryptocurrency, how is this treated for DRO purposes?
Options are it's treated as income, it's treated as an asset, or it's ignored.
That's great. So those were the 6 questions. How are we getting on with those for those who actually had it pop up on the screen?
We've had 64%, Duncan, make answers, so I think we're probably good to end the poll, and then those people that can see the quiz will see the answers immediately, and then you can go through the answers for those that haven't been able to.
That's great.
Yeah,
Thank you
all
so
32
much.
people you've done. No, 34 people have managed to get into it. Never mind.
Ah, great. And the quiz has popped up on my screen. Fun of everything else. Okay, but it's good obviously to see the answers. So I'm just going to try and minimize that if I can. I'm not going to share the results of that. I'm just going to go through the answers as I got it. But just to confirm that the quiz has covered sort of why they've been declined or revoked, looking at it sort of applications and the expenditure figures, something about deductions for benefits, and also the motor finance compensation scheme. Oops. So question 1, what was the most common reason for refusal of a DRO in 2024? The answer was that the applicant had had a DRO in the last 6 years. So I select my paper version 2. That's great. So obviously, and then the second reason, oh no, didn't do that. Don't do that. That's lovely. So that's the first reason. And also then the second most common reason is that there'd been a preference in the last 2 years. And also that they'd had an IVA, they were joint over the last year or so. So to try and minimize that risk of it being refused, how can we sort of check whether they've actually had a DRO in the last 6 years? There's obviously the insolvency register, but it's only on there for a short period of time. The best place to look is on their client's credit report. So it'll be on there for at least 6 years on whether they've had a DRO. And regarding the IVAs, is if they have had an IVA and it has been revoked or cancelled, terminated, sometimes it still shows on the credit report or on the insolvency register still being active. So what we do need, or what you would need, is to make sure you've got a copy of the termination pack, and we then have to actually send that into the DRO unit to make sure that it is definitely cancelled. Otherwise, it is automatically revoked or cancelled at the beginning, I believe. Lovely. So that's question 1. Question 2, what was the most common reason for revocation of a DRO in 2024-25? The answer is that the value of assets were above the 2,000 limit during the moratorium. And then the second most common reason, because it was discovered that they had qualifying debts were actually above the debt limit that is allowed in the DRO of £50,000 of qualifying debt. And the third most common reason was because the surplus income exceeded the £75 during the moratorium. So hopefully we can look at how do we look at reducing those limits. So obviously the assets above 2,000 is quite hard for us to try and get that answered from the question. We're very reliant upon the client to answer those. Obviously it is the client's application at the end of the day. But the second most common reason is that the debts went above the limit. And this is normally because when the insolvency service write out to the creditors, they come back with more debts than what we have listed or that have been listed. A common one are DWP debts. There's more hiding in the background. So please ensure that you sort of contact the DWP. There is a third-party helpline that advisors can use. So if you've got a pen and paper, these will be available afterwards. I'm sure these slides can be available. So this number, there's an 0800 number. So it's 0800 232 1944. And it's a DWP third-party helpline. So as long as you've got the client's authority, you don't need the client with you normally, they can go through a summary of all outstanding DWP debts, what's being deducted from the universal credits as well. So they've been really helpful. I've used it a few times. They've been really helpful. The only thing they couldn't tell me was about a particular active social fund loan at the time. The person I was talking to couldn't help me at that particular time, but I found them really helpful. And you didn't have to stay on hold for ages listening to the lovely music that you normally get. So that was question 2. And then question, expenditure on alcohol. I'm just looking at the answers, how we got on. Alcohol and tobacco is an allowable expense on a DRO application. I can see that 91% of you got that right, that it is actually true. That it can be, and is, as long as it's all within the spending guidelines of the standard financial statement, it is an allowable expense for that particular category. The reason it's in the quiz is because there was some confusion when the Insolvency Service made an announcement about how this should be dealt with, and it wasn't very clear at the start. Basically, it almost came across if it wasn't an allowable expense, but it is after, as long as it's within the spending guidelines of the standard financial statement. What are the different situations where the answer yes should be chosen to the question has an attachment of earnings order been applied? The answer is to both of those scenarios, because if there's an attachment to earnings, then the employer is told that that needs to stop. If there's an attachment to benefits, it needs to be put on the application, and then the Insolvency Service will contact the DWP asking for that to be stopped. If it's not listed, it takes much longer for that to stop. Obviously, that's then giving the client much less income. And when you're doing the standard financial statement, the income for universal credit, if there are deductions, needs to be listed before those deductions take place. Because that also then stops the client having to update the Insolvency Service if those deductions stop later on. Look at question 5. And if a client has a claim for compensation-based motor finance, secret commission as it was called, when will this be treated as an asset for a DRO? So this is a bit of a tricky one because it's obviously quite a live matter at the moment, and the court ruling that's just gone through. I'm just trying to look at the answers, sorry. When the client identifies they have it, receives confirmation, or when they receive the compensation. Okay, so most of you put down that when they receive the compensation. The answer actually is when they receive confirmation that they are entitled to the compensation, is what it was that the Insolvency Service have told us that accounts for that particular situation. So obviously that could be interesting. Now, since these were originally written, the claim for that compensation was possibly going to be higher than it's been announced. But obviously the FCA have recently will be launching a scheme for this. And I think the limit is going to be somewhere in the region of £700 per client. So it's not as, the risk I think is reduced compared to what it was going to be when this was all still going through the courts, because they didn't know how much the limit was going to be. But it's an area to keep an eye on, and obviously to keep an eye on if any of your clients have made claims or got claims in, that may affect any DROs going forward. And finally, 6, if a client has cryptocurrency, how is this treated for a DRO? Now, this question is possibly a little bit out there. I'm not sure how many of our clients may have cryptocurrency, but it's a valid one, and I can see that most of you, but 94% of you, are treated as an asset, which is the correct answer. So cryptocurrency will count towards the £2,000 asset limit when working out if the client's eligible. There's a description of the Insolvency Act, which I'm not going to read up there, of how what an asset is and money. The biggest difficulty with cryptocurrency, and I can't answer how you would value it, but it's difficult to value and it's so volatile. So obviously it's sort of a snapshot in time, but they would need to be involved and again listed that they've got that particular item as an asset. I hope that's been helpful. Bit of a whiz through those 6 questions, and hopefully some guidance on how to sort of eliminate those reasons for them being revoked and those additional items. I'm going to hand over to Isla, who is going to look at going through our fact. I'll stop sharing. Thank you, Isla.
Hello, everybody. So I'm going to actually play you a video of how to go through the Fact Finder, because I practiced doing it live and I absolutely couldn't do too many things at once. I'm apparently not an exponent of patting my head and rubbing my tummy at the same time. So I will be able to monitor the chat and I might be able to answer questions as we go. So Becky, if you could start the video, that would be brilliant. Thank you. I forgot to say before she starts, I forgot to turn the green screen filter on. So I will say things are in green when they're black. Sorry about that. I can't hear the audio. Does anybody hear the audio? No.
No.
Just try, let's restart that and hopefully that will work. Bear with me.
In this video, I'm going to go through the process of how you get a DRO referral done, starting with getting the fact finder. So my client Minnie Mouse has come to see me, and we're going to have a look at her case record, and we're going to start by producing the fact finder. She's not actually my client, she's Duncan's client, but never mind, I did that. So we've spoken to her, she's agreed she wants a DRO, she's signed the client disclaimer. I read this out to her and simplified the language because it's quite complicated. I have asked the Insolvency Service if we can simplify it, but they haven't agreed yet. So for the moment, it might be worth going through and making it more client friendly. But she's signed it anyway, so we can go ahead and get the debt relief order done. We've also shown her the financial statement and she's agreed it, which shows that she has, well, it says she's got £31.68 left a month, but that's after savings. So she's got £35 and therefore can have a DRO. And obviously her total debt is well less than the limit of £50,000. Also, let's have a look at her assets. Oh, no, I don't want to go over there. Let's go back to her file. Her assets in money. She's got a car, but it's on HP, so it doesn't count as an asset, even though we've put it in there. And she's got a Hoover, so which is worth well below the limit, so she can have one from the asset point of view. So then I have gone and I have started her on this tab here, the fact finder. So I pushed that and I got to the fact finder page. So when you go in, the page that you're on is always in black. So I'm on the introduction page, and so it's black. As it says on the introduction page, if it's not completed, it is red. Now, in fact, before Minerva came in, Minnie, I did quite a lot of it, but there's a couple of details that I didn't know. So let's go through and see what we've got. So I'm clicking here to get started. It's auto-filled with Duncan's name because he is the main caseworker. So I'm going to X him out and put myself in, and then it auto-fills with my contact email. That's his phone number. So I'm going to just change it to mine. Can't remember how many is that? Is that right? Okay. Now, when I first, a while ago, I got an Experian credit report. So, but unfortunately, that was 3 months ago now, and that's too old. Basically, it has to be less than 2 months ago, and then I can do that. So let's put in the 6th of October. And now you can see that has gone green. So that's excellent. And it reminds you to attach a copy of the report to your referral. So there we go. All of these grayed out things have been brought in from the client details. So in the client and household, we've got Minnie. For some reason, it doesn't call in the previous name. I think that's because we've only got one box for previous name and we've got 2 boxes here. So Cheeseman was her maiden name, so I've copied that in from there to put it in her previous last name. Now her legal name is actually Minerva, but because she's called Minnie somewhere on her credit report, we've put that in as a previous name, so it's an alias rather than an actual previous name. So the reason this is red is it says how many other people are financially dependent. Now, Minnie obviously has a husband who is Mickey, but he is not, and she's married, but he is not a financial dependent. We normally expect you to put a 0 in that box. And if you put anything except 0, we will come back and ask you why. And the reason is that anybody who has another source of income, so in Mickey's case, he could have benefits or his own work, can't be a dependent. The only people we accept as dependents are adults who are foreign nationals and don't have any right to recourse to public funds, or children who are 19 or 20 but still in full-time education, so the client is getting child benefit for them rather than them getting benefits of their own. If a client's 21-year-old child is just sitting around and doesn't want to claim universal credit, that doesn't make them a dependent, that just makes them lazy. Okay, so that's gone green, but before we leave this page, I just want to say 2 things actually. Please don't put any gaps in the national insurance number because we have to take them out. And also, if the client says that they've been born in another country, don't just put the country, put the town in, because the town is a security question the insolvency service will ask. So it has to be the town as well, but Minnie's told us where. We've also checked with her that she is actually a British citizen, because if you get a debt relief order and you're not, it could affect your ability to stay in the country. So we don't want to be doing that, and we'll have to think about it again probably. Okay, so the client email address, while it says you can put something in here, that is because if the client doesn't have an email address, you can type in your own email. If they do have an email address and it shows here in the client details, it will revert to that address. So if you want a different address there, unfortunately at the moment you'll have to take it out of the client activity. Okay, so now we've got Minnie's address here, 8 Camembert Road in Stilton, and it only puts that one in automatically. It didn't put Cheesemaker's Cottage in Cheddar in, even though I have it in this address. And the reason for that is that she's been out of that address more than 3 years. So it only puts in addresses where she's lived within the last 3 years. If I'd wanted to, I could have changed that date and made it appear automatically. But to be honest, it was easier just to add it like that. And in fact, looking at it, it's just as well I did, because I spelt Cheddar wrong in the original address list, but never mind. So those are all her addresses that she owes any money. So that one appears on her Experian report. So we've put it in, even though it's not in the last 3 years. Insolvency history. We don't expect to see any of these 3 ticked yes. If they are, she can't have a DRO. So obviously she's not currently bankrupt or in an IVA. Debt management plan, that means, as it says, a debt management company, not our pro ratas. I've never seen an admin order, so I would say no. That is not the same as a CCJ. Don't put it in if they've just got a CCJ. If the client has a pending bankruptcy application, that means their money has already been taken. And if anyone else is petitioning the court to make them bankrupt, that is great news. You press yes, and then they don't need a DRO and can't have one anyway. Has she ever been subject to any kind of insolvency proceedings? Yes, she has. And she has an IVA. It started less than 6 years ago. So you would think it might be, or less than 5 years ago, you'd think it might be a current one. But when we go to the Experian report, you can see that whilst she started then, it says there that it's completed. And I've checked the insolvency register and it doesn't appear on the insolvency register either. So we're happy that that's completed and they won't ask us for any awkward questions. Okay, She did have a DRO previously, but it was 10 years, more than 10 years ago now. So it doesn't appear on the credit report. So if they say that they only know an approximate date, as long as it's not on the credit report, you know it was more than 6 years, so they can have another DRO now. And I tend to just put in an approximate date. So if she said, oh, it was in 2015 summer, I can't remember when, I might just have put in the 1st, for example, of July. And if she just says the year but doesn't know, I just put in the 31st of December just to be sure. I've never had anyone query that, although it's a bit slack, to be honest. Okay, never mind. Now, Minnie is a very hard worker, looking after herself and her husband. So she has more than one employment that I've already put in. You should always add at least one because it's the employment status. So in fact, Minnie, as well as being self-employed and having a job, is also a carer for Mickey. So we're going to put in carer as well. And as you can see, it automatically says that there's nothing else to add. Here, if we edit her bail-in job, she's a cleaner. We have to put extra information in. We've just put in payroll number 1 in there. I don't think it's likely that she's payee number 1, so I'm actually going to change that to be the national insurance number, because obviously her employer should know that anyway. So there, and that shows when she started working for the Bell-in. I checked the postcode on Postcode Finder because she didn't know where it was, and I have to get the right one in. Okay. She's also started this year. She also started working for herself. So because she's just a self-employed cleaner, we have put her in just with her trading name. She's used Minnie instead of Minerva. And she started that at the beginning of the year. She's a sole trader. She works from home. Some self-employed people, if they have shops, can't necessarily have a DRO. So you need to check that a DRO won't affect them working. And she's told me it's fine because all she does is go to people's houses and clean for a couple of hours a week for them. Before that, she was a public speaker, or in fact a public squeaker, trading under Squeakers Are Us, but I don't know if she lost her voice or something and stopped doing that when she started cleaning. This page is only for previous self-employments. If she'd just had her current self-employment, we would have just put no for that one. You don't need to put current self-employment in again, but she did, so there we go. Assets. So as I say, we checked on the assets that she's got this car that's HP. She also has a Hoover for her cleaning job. So we put the Hoover in as a business item. Not many clients have business items, to be fair. We've put naught in for all of these because they only go in if they're available to pay creditors. So that is only if it's savings, or in the case of cash stuffed under the mattress because they don't trust bank. But it does include savings accounts in her name for children, and it also includes Christmas savings would count towards that limit. So let's hope they haven't got more than £2,000 saved up ready for Christmas. You'd have to wait till after Christmas in that case and tell them not to do it again. Money owed to the client might actually start being a thing soon because of the diesel selling scandal, but you only put that money in if it's confirmed that they definitely owe it. So just the fact that someone says, oh, I had a diesel car and I'm hoping to get some money back doesn't count. Okay, now we've put in here that cars bought on HP are not owned, so don't be included, but they've still got to be worth less than £4,000. We've also got to tell the insolvency service separately about any HP vehicles, just to show that they're worth either under £4,000 or why the client's allowed to keep it. So we are in fact going to put that in here, but we have put the fact that it's hire purchase. So please do that. Please say hire purchase and then put it in as if it was owned. In this case, obviously it's worth more than £4,000, but we won't worry about that because it doesn't actually belong to her, so it won't affect the DRO when we come to it. and we're just checking that that is the same as that. It's good practice if they don't have any assets just to write no assets in your assets tab, which is in money. So if they don't have any assets, you have to tick the box anyway, so you might as well write no assets there. Okay, so that's everything. Almost certainly if they have their own home or any property, they won't be able to get a DRO, so let's assume that that's going to be a no. Okay, now, has the client ever contributed to? She did. She's got her pension from the Bell, and she's also got a little personal pension from her self-employment. Now here we've said she's not aged 55 or over, but you can see she has turned 55 since we first put this in. So we answer yes, and that brings up some more another question, which is to say, can they access a lump sum? Now, people put no here, but it's incredibly rare once they've turned 55 that they couldn't in some way access their lump sum. So then you've got to check the insolvency service, which basically says, is the pot worth more than the debts? Now, in Minerva's account, it's not worth very little because she's only paying in £10 a month, and she's only been doing that for a couple of years. So that's all fine. If that amount there was more than the debts, please phone us on advice line and we'll talk about what can be done, if anything, about that. Don't tell the client to get their money out of their pension, because that's pensions advice and not debt advice. So we've got our two in there. I'm going to edit that one. Again, I've just put in the payroll reference because I don't know the policy number. And it is approved, and in this case it is with the current employer, so I've just put the employer's name in. For this one, I have put in the actual address for Standard Life, and I've said no, it's not with the current employer. I don't know if I should put yes because it's a self-employment. No, I shouldn't. Okay, so then we come to undervalued transactions and preferred creditors. If these are filled in yes, you have to tell the client it might affect their ability to get a debt relief order, but it very rarely does. But it's not our place to decide that, it's the insolvency services place. So we are going to put in that there's a potential transaction at undervalue, and it's up to them to decide. So we've put one in. She sold her old car a year or so ago, well, nearly 2 years now. It was worth £500, but she didn't get any money for it. So we're going to, I'll press the edit button and you can see why that happened. So she didn't get any money. It's worth 500. What happened there? Let's put a tenner in just for fun. Okay. Who did she give it to? It checks if it's connected. It's annoyed if it's a connected person more. But it wasn't a connected person, so we just put other, so that's fine. So basically then we have to put a little story in. So in this case, the car failed its MOT, so she couldn't take it away. She left it there and transferred it to the name of the garage. So that's why. And that happened within the last 2 years. If it happened more than 2 years ago, it doesn't matter. And again, she's preferred a creditor, which was HSBC. So let's see why she did that. In fact, let us go to the Experian report and we can see why she's done it. So here is her HSBC credit card. It defaulted in October last year and it was 1,512. So she immediately agreed to pay £10 a month, and she's actually paid 10 months worth of it so far. So she's only paid £100, which probably won't make a difference, but we're putting it in because they can see that she has been paying it down, and it was not just a token offer. So she said she'd pay £10 a month because she had a current account with them. Let me see if I can find the current account. There we go. There's her HSBC current account, and she couldn't find another account at the time, and so they were going to take all the money out of her account. And so she's agreed to make this payment. We've helped her get a new account. So here's a lovely new Monzo account that we did for her. And so now she doesn't need to worry about HSBC. She didn't take debt advice. She did it before she came to see us. So that is fine. That's again unlikely to stop the DRO, but we put it in and they make that decision. Okay, then finally, creditors. So let's go back to our debt list. So the debt list should pre-populate in here. So what have we got? Anglian Water, that was in her bill, I think. So there it is. We don't have the reference number, I couldn't be bothered, so we've put that in. That's her current bill, in fact. Then we have got, now she thought that was Anglian Water, but they haven't replied to us, and we haven't had a reply yet from the County Court Business Centre. The amount on that, which we've got from the credit file, is, no, where has it gone? There. Is a different amount because she's paid some of it back. So we're fairly sure it's Anglian Water, but we're not 100% sure. So we're going to put the County Court Business Centre in anyway with the reference from the credit file, just in case it's somebody else. It might, maybe it's Lowell. So as soon as we find out who has that CCJ, we will need to tell the Insolvency Service who that was, but we don't want to hang around and wait for that. Okay, then you can see she had HMRC tax credits that she thought she had, and it's not coming off her universal credit. So we don't quite know what's happened to it, but she's convinced that she's got this tax credit debt. And again, they haven't written to us. So we put it in as HMRC, but we've also put it in as the DWP in case they have transferred it to the DWP. So as you can see, we've got HMRC tax credits, DWP debt management. And we've made it very clear that it's the tax credit overpayment for the DWP. Okay, so then we've got EDF, which is her current gas and electricity, and that is the debt off her current gas and electric bill. So it'll include everything. Now, obviously, it's going to go up because she's using it. So what we do when we apply for the debt relief order is we tell her to get a new meter readings and phone EDF as soon as the DRO goes through to ask them to change the amount to the new meter amount. Okay, then we have got this debt here, which is a magistrate court debt to Peterborough Magistrate Court. So just go full screen for a minute. We've got this one here. It's a magistrate fine, and we have put in therefore that it's excluded. But we have still put it in the list of debts, even though it doesn't count towards the debt limit, because if it turned out that that wasn't a fine, we could just change that from excluded to included, and it would still therefore stop being paid. So that would be handy. Then we have got HSBC, that's the credit card. We haven't put the current account in because there's no overdraft on it, so that's fine. And this is her current council tax. As you can see, we've put in the year from her current bill, and we've put a separate debt in for previous years. That is because she only has 1 year of previous years owing, but we don't know how much of this debt we can include. She thinks she's had her final reminder, in which case it can all go in, but certainly any amount that's passed, so that'll be 6 months now, so it's 6 months since April, could go in. So she would definitely get at least half of that off. And if we put in the higher amount, they can't argue that it wasn't included later. Last year's council tax has gone in. It's actually being collected by Jacobs. So previously it was down as a Jacobs debt, but we've taken the debt off and just left their fees in. And that means that Jacobs will also be told that the debt relief order has been made, and hopefully they will stop bothering her. Sometimes if you just put the council in, they don't tell Jacobs and Jacobs will still go round. Sometimes if you put Jacobs in, they don't tell the council and still bother them anyway. Then she has got her rent arrears, £1,800. You'll see later her rent is, their joint rent is £800 a month. So this is over 2 months. So you could have had a suspended possession order for this. People ask, can we leave it out? And we say, no, you can't. Any rent arrears are always qualifying. So before you get to this stage, you need to ask the landlord what they will do. The client cannot pay arrears more than £75 a month. Otherwise, they have spare money and don't need a DRO. But obviously, in her case, her husband can carry on paying the rent arrears, so it shouldn't be a problem. It might be a problem when we come to him. But at the moment, she's our client, so that's fine. Lowell, we just got that off the credit report, so we got the number from there as well. O2 on the credit report, O2 is up to date, but so there you go, O2, but you can see her payment for her phone, £29 a month. It's well, up to date, let's just say unclassified, but it's an unsecured loan. They did say at one point that it had to go in because it was an unsecured loan, but people were saying, well, hang on a minute, £27 a month, that's in the SFS, so it's acceptable payment for basic family needs. So now you speak to the client and you say to them, do you want it to go in? So she's got her SIM card with O2 as well. But I've said to her, look, you could save £350. It's an unsecured loan, so it's not HP. Your phone won't be taken off you. If we put it in, that's fine. All you've got to do is change your SIM card for either a pay-as-you-go SIM card with O2 or change it. And she's decided to go to giffgaff, so we've changed it. So that's great. Then we've got her Universal Credit Advance, which is coming off her benefits, her Universal Credit. That is perfectly fine to go in. Social fund loans were excluded, but it's incredibly rare now for anyone to have them because they were on legacy benefits. Anybody who has any loan from Universal Credit, it can go in. So that's one of the really common things that we find missed off. But she had it, so we've put it in. And that means that that Universal Credit Advance will stop and save her however much is owed on it. Let's have a look, see what it is. So yeah, so as you can see, she's going to save herself another £500. She's paying £49 a month off that. We've put it in as an offer because obviously it'll stop, so it doesn't want to be netted off her income. And it's paying, it will stop for her, but because it's joint with Mickey, he will have to pay. So it won't actually stop in real life, but Mickey will need a DRO as well. And once the second of them gets a DRO, it will stop. And because it's coming off her benefits, we've said that there is an attachment of earnings. It isn't technically an attachment, it's a direct benefit deduction, but that's how we have to put it in. So for those, we ask you just to put in DWP there. Their postcode for that is the debt management postcode, which you can find off the debt management address. If you don't know it off by heart like I do, you just put the national insurance number in as the reference for the court. Then the Universal Credit Department will be told, so please use Universal Credit as the creditor for any advances, but also the Debt Management Department will be told to stop taking money off. And I'm making it very clear what it is by putting it as the debt category and the account number so that everybody can see exactly why she's got it. And then finally, we've got Zilch here. That she owes a little bit of money to, and again we got that off this credit file. Now she did say she wanted to keep Zilch because she was still using it, and we said she couldn't because it's in arrears. So she owes it and it's no longer current, it's in arrears, so we've had to put the Zilch in. She also had one thing of Klarna, unusually, but that is up to date, so she can decide whether or not she wants to put it in. And to be honest, she's only got 2 months to pay £19, and it was for something she wants. So she's decided to keep it. You can put Klarna into the DRO if you want. It's unlikely that anybody will come after the client for the goods that they've bought, because it's not Klarna that owns the goods, it's whoever she's bought them from. So each little shop that she's been to actually still owes the tops that she's bought, but we won't count that. She wants to keep on with Klarna, so she said no, and she can. I've advised against it, but it is, in her terms, just spreading the payments instead of saving it. So fair enough, really. Okay, and then if you tick no on the complete list, all it does is read out the creditors and says, no, you've got to do it in. So you might as well always click that yes anyway. And then you can preview it and you get the lovely fact finder. Please don't send us a preview, blah, blah, blah. All looks lovely. And then you can publish it. And then it's published and is in files. Then I attach my 5 documents to an email. So I attach my checklist first. This is meant to help you get the application correct the first time. So you should have had it available, as I did, as I put the application together. So you need to check first that you've got up-to-date versions of this. To do that, best to download it from the CMA website. And then, because it says there, they've all been downloaded from the website. So I've done that. When you're happy that you've got everything together, everything you need, you can tick all the boxes, sign it, date it, scan it. I didn't bother scanning, I just typed my name and send it to us with the rest of the application. And then it tells you what you've got to do it. So we have checked everything, blah, blah, blah. And then we've got the completed checklist, this document, the fact finder, which we have got there. So that's that one. That's what it looks like when it's printed off from files. All those bits of information now in. The SFS summary page. We don't need this signing. That is for creditors, like sometimes to see them signed. Personally, I never get them signed and no one seems to object. So we'd rather have this downloaded version, because then we can copy and paste and we'll get their figures more accurate when we're going through and putting it onto the insolvency website, and we don't introduce mistakes of our own. So that's good. And then we're going to add our DRO disclaimer. So we've got 1, 2, 3, 4, 5 things to add. So there we go. And we've got our up-to-date unredacted experience report. So this should have made you very easy to do it. So we're just going to have a quick check of our experience report, make sure we've got everything. So we know the fact that she's married to Mickey, that's not important. We've got our county court judgment, we've got our IVA that's gone, we added Vanquis. I don't know if you noticed that. Oh no, we didn't add Vanquis. Why didn't we add Vanquis? Aha, because Vanquis sold their debt to a CAIS member on the 28th of February 2020. They defaulted £281 and then they sold it, and the person they sold it to was Lowell. So there's no balance left with Vanquis, and we've got Lowell in, so we don't need to add Vanquis as well. Those are our 2 current accounts. Neither of them has an overdraft and neither of them's overdrawn. It is worth checking with Minnie that she's actually getting all her money into Monzo. We told her to open one, but we need to make sure she's not still using the HSBC, because sometimes you say open a bank account and they do just that and nothing else. And we talked about Klarna, we talked about Zilch. Her car insurance is £100 a month, and that is on the financial statement, and it is car insurance and it's up to date, so it doesn't need to go in. We've got her mobile phone in. That's going to stop because she's going somewhere else. And we've got the HSBC in. So yeah, that's all lovely. So we've done all that, and then we're going to attach the documents. And that is how you do it. And you send it to dro@communitymoneyadvice.com if you are a debt advice centre. If you are a money mentor in a Connect centre, you only need to get the fact finder filled in because it's information the client will tell you that they don't know about at the hub, and also the disclaimer. And you just send that off to say yes, you've told them everything that you've been told to tell them, and they're happy with it all. Okay, so other little bits that you might need to send to us. You might need to send a pension valuation. We'll just send our pension valuation that we've got from Minnie to confirm that her pension's not worth very much. If your car was, her car was worth just under £4,000, we might have paid for a separate valuation just to prove it, and we should have sent that as well, just to confirm. And particularly if you've got an IVA that still shows as current, but you know it's failed, you need to send the termination pack. So that's everything you need to do to refer to us, and you can ask us questions now about any of that. If it's urgent, before I say that, put urgent in the capital. Now, I've done a terrible thing here. I've put Minnie Mouse DRO. I shouldn't have done that because that's against data protection. I should have put Isla 1 DRO. If it'd been urgent, I could have written urgent Isla 1 DRO and then say in the email why it was urgent. Okay. And again, if there's any communication issues or any vulnerabilities that you need us to think about, put it in the body of the email. So normally we can give you a name and a phone number of the person that will be contacting the client if they feel like they don't answer phones to people they don't know, and that's fine. If you've got an AI in your own centre, it's still good practice to follow this procedure. And if you are an AI yourself, I even follow it for myself when I am doing my own client DROs. Okay, so I'll stop this.
Okay, so I have been answering questions on the chat as we went along. So if you put a question on the chat, hopefully you will have had reasonable answers in there. Originally, this video was a lot longer and it went through what to do with the SFS as well, but that took the whole hour just for the video. So some of the questions that people are asking about the car HP costs were actually covered in the SFS. So I just want to briefly say that the most important thing I said in the SFS was don't forget that it's individual. So you need to split the SFS into two, because that's another frequently not done thing. It's not household, it's the person, and it's the individual, which means some people could have a DRO when you don't think they can if you've done a household SFS, because you think they might have £150 left, but if they had half of that, it would only be 75, so it'd be fine. Okay, any questions?
Isla, can I ask a question?
Yes, Leona.
So I've got a current client that I'm going to be, well, most of the paperwork's completed, but he does have a car which he uses for his work. He needs it for his work because he's a store manager and he has to go from store to store. But with that being on hire purchase, obviously he's repaying that back. That goes on the financial statement, doesn't it?
Yeah, well, no, because if it's his hire purchase, he can't pay that. He could only pay up to £75 a month. So basically the surplus could go towards it. So it could be that he can't have a DRO in those circumstances.
Even though he needs it for his business, like his work.
Yeah, unfortunately, DRO is totally black and white. He might be able to go bankrupt. Obviously, that would cost him, but also that then the official receiver would look at it, but they might still say no, he can't do that. So company car would be the best if the company could give him a company car.
Ah, right, because I've gone through this whole process, and when I've discussed it, I was under the impression from the discussions that it could be because it was for work purposes.
No, unfortunately not in a DRO. There's no exceptions. If the company agreed to pay the HP directly, and so it wasn't on his SFS, then yes, or someone else,
What
like
if it's
I paid it.
right?
If he has a partner or another family member who would pay it, that would be okay.
So I might be just being a bit slow here, but so if it's hire purchase, what if it's a loan? Is that the same thing?
If it's a loan, it would belong to him, and therefore the whole car would have to be worth less than £4,000.
Yeah. So really, I've took this client through the whole process, and I've done everything, and it's not. We can't.
Probably not. Yeah. Come and talk to us on advice line about that one, Leona, separately.
Yeah,
We'll have
brilliant.
figures and see if we can change it around for you.
Yeah, thank you.
Hi, Isla. I put a question in the Q&A box about 10 minutes or so ago. And there's a couple of other questions in there as well. So
you might not be able to spot those, Isla. So I will read them out to you because they've come through a different stream to chat.
Okay.
We actually probably only have time to very briefly answer one, but what I would suggest is, of course, you've got access to advice line, so please do get in touch with Duncan and Isla if you've got questions that we haven't been able to answer. I noticed Kylie, I think, had a hand up, and perhaps others too. So if you can't get your question answered here, please contact them anytime you like. Also, you could use a direct chat from during the day on the lobby and contact Isla or Duncan directly that way too. So Nigel, the question you'd put in there was having regular clients with Scottish council debts, but now living in England. Do you know if these councils will respect a DRO? Assuming not, do we have any centres or partners that can apply for a minimal asset process? And same question, but for Northern Ireland. If you think that's one you could answer briefly, that would be wonderful. If it's not a brief one, then it might be one to do offline. Over to you.
Yeah. Duncan?
My initial thought is that it would be treated the same as any foreign debt. So whilst they are in England, they shouldn't be chasing or trying to collect it from them. But if they were to move back to Scotland, then they would be perfectly liable to try and chase them for that debt. That's my initial thought, but I think we may need to just go back and check on.
So definitely they do definitely chase them. We still get letters, liability, well, equivalent to Scottish liability orders being sent to addresses in England from Scottish councils.
Right. Okie dokie.
Yeah, they do have a cross recognition of debt solutions, but yeah, as Duncan says, in Scotland it wouldn't count. In Ireland they have DROs, but they're slightly different DROs to our DROs. So again, they shouldn't pursue somebody in England for a Scottish debt that's gone in a DRO, but probably that they would be sending a bailiff, so it would be up to us to talk to the bailiff and say, nah.
Yeah. So these clients are with a charity that helps them with addiction, so they come to England for rehabilitation and then return to Scotland. So what we're trying to do is resolve their debts while they're with us in England before they return.
Okay, perhaps you should send to Tweedside who can do both. No, I don't know. So yeah, so
did you say Tweedside would be the
right? Is that you? Yeah, Tweedside are in Berwick on Tweed. Yeah. And they have some Scottish clients and some English clients. They're a connect centre, so eventually it would go through to the hub. But
okay, great. Thank you for that. That's very useful. I'll make contact with them.
Folks, I have to say, I think we have run out of time. I know there are probably some other comments and questions that went into chat. We do get to download the chat transcript, so if there's something in there that we've missed, I'm sure we'll be able to pick that up. But just to say thank you so much for joining the session. We really hope that you found it useful. We're going to have a lunch break right now, so a decent amount of time away from the screen, as I know there's been quite a lot of that this morning. You've got until 1:30, so please do come back and join us at 1:30 to hear Ruth Stevens, our second keynote speaker. But during lunch, if you do want to spend a bit more time on your computer, we've got the exhibitor floor open with some live spaces where you can drop in for a conversation. And we've got lunch and chat, which just, bring a sandwich and have an informal chat with other people from CMA, just a relaxed Zoom meeting. So we look forward to seeing you later, but I'm going to end the meeting just now. Thank you very much for joining us. Bye-bye, everyone.
Bye. Thank you, everyone.
Bye.
Yeah, everyone. Bye.